What is going on out there, good people, and welcome back to LMD Trading, where I am living my dream trade. Hope everybody out there is doing well today. As for myself, I'm doing pretty good. Just taking a minute out of my busy day to go ahead and get a trade recap done. Look and see how we did today in the futures market. That was pretty much all I traded. I did not trade any options today. Missed some killer trades based on this new system that I'm working on, but had a decent day in the futures account, cash account. Nothing really much to brag about, but every day is every day. So let's go ahead, let's jump on over into TOS. And I'm gonna go ahead, I'm gonna bring up my trade report card for the day. We'll take a look, see how we did. Reviewing trades for September 3rd. This month is moving right along. This year is moving right along. Goal, same goal as it was yesterday, and it was on Monday. Do not move stop once I'm in a trade to give it more room. Basically meaning once I'm in a trade and I have established where my stop is, if price is heading to that stop, take that stop. Because if it breaks that level, that invalidated the trade. Plain and simple. Reminders or affirmations, I didn't put anything there today. I need to start putting something there. Just a quick little affirmation or a daily reminder. Today, I sat down at the desk at 10:17. Wednesdays are my late days to get into the market. I have a prior obligation Wednesdays that prevents me from getting at the desk when the market opens. So did not get into the desk or get to the desk until 10:17. We took our first trade at 10:20. That trade was a 3-bar play. Did it immediately go into my favor? Yes, it did. Comments, not much room. And it went 1R. Actually, I'm gonna hold off on going through those until we actually start looking at the chart. We'll come down, look at the overall grade though. Gave myself a C on today. If we do look at the grades, we see that first trade was a B, second one gave myself an A, and then those last 3 were C's. Overall, that may have worked out to maybe be about a B, but still gave it a C. Percent gain or loss on the account today, we made 6.27% on the account today. So not quite as good as yesterday and not as bad as Monday was, because Monday was horrible. Monday was horrible. I'll probably do something at the end of the week, just kind of going over my end of the week, and then we'll talk about that. But what I learned today, another day trading on eggshells, watching the trade and not letting it work. That's what it kind of felt like as I was trading today. Changes I need to make from today: wait for solid setups and let the trades work. Ensure trade has room before getting into it. And then best trade of the day was number 2. And we'll kind of go over that once we get there. I'm gonna go ahead, I'm gonna get rid of the report card. Now we're gonna take a look at the chart. This is MNQ. This is what I trade. It is the micro NASDAQ futures. This is how the market ended. This thing flipped red at 130 and just made a nice little tank out. Kind of bottomed out right here. This was a 61.8 level, fib level. This is a key level on the chart. And we see that it kind of broke below it, got back above it, and it just ripped. Market just ripped into the close. Didn't catch any of that. Like I say, I'm trying to focus on having a set, defined time that I want to trade. And Didn't take any trades this afternoon after 11:57. But let's go ahead. Let's back this thing all the way out. We'll take a quick snapshot of what the market kind of looked like from 5:30, 6 o'clock. Kind of just ranging, not really setting higher highs or higher lows. So when it's doing that, I kind of just call that a range. 9:20, right before the market opened, kind of started selling off. I see market open, ripped up, ripped back down, ripped back up. Now you get a higher high from this point, flushes back out. You get a higher low from this point, comes back up, higher high from that point, higher low from that point. You see what it was doing, and it just kind of took off. This is about where I kind of sat down, so I missed all of this action, and it sold off, like just sold off nastily. But let's go ahead. Let's come on over here. We'll look. You see these little channels that are drawn here? These were the channels that I was working with when I sat down. If you look at them, they're not really next to anything. So what I'm going to do, I'm going to just duplicate this one real quick. I'm going to come up and I'm going to let you see how I drew it. I drew it based off of that area right there, this area right here. And then you see that area there. And then I just drag them out so that they are about, usually, like I said, market open, I want them to be about 20 points. This one here looked like it was about maybe 15 points. So not quite the 20 that I like. So that's why it was a little narrow. So I'll delete that one. We'll come over, take a look at this one. I'm going to do the same thing. I'm going to just duplicate it real quick because I don't want to actually move it. I want to keep it where it was at. I'll bring that one down. And you can see right there, that was the area that I pulled this channel, these two channels from, and then I drug them over to where current price was at. So we'll delete that one. And now what I'm going to do, because these should be set to where they were at when I was trading. So I'll extend that to the right. I'll extend that to the right. And you notice based on where they were lined up at, you kind of see what price was doing once they started working. So I'm going to go ahead. I'm going to drag this out and we're going to jump right on over into the NinjaTrader charts, which is what I trade on. Even though my account is with Tradovate, because yesterday I know I mentioned in Tradovate I went in and I set my risk levels in there so that I can only take a certain amount of contracts per trade. But I don't like trading with Tradovate's charting. So Tradovate and NinjaTrader are the same company, so I prefer NinjaTrader. But let's jump on over and look at these trades, y'all. And I will bring up the trade report card just so we can kind of look at that section where each trade is at. Try to blow it up just a little bit there and make sure that everything else is out of the way. I'm gonna go ahead, I'm gonna set this to an arrow and we'll kind of drop some arrows in. So first trade we took was at 10:20. So if we come over and we look, actually these charts are not set how they would have been when I would have been looking to take a trade. So I'm gonna do that real quick. I'm gonna just move this one down. I'll find a point on the chart where I can see some lines touching right there, and right there. So that's how my charts would have been looking about this time. Up channel is good. It was that down channel that wasn't really where it should have been at. But we took our first trade at 10:20. Boom, right there. And if you notice, I said that it was a 3-bar play. We had this nice igniting candle. We got this little tiny resting candle. And then I got in on this candle here. Bring this one over a little bit so we can see it on the NinjaTrader chart. didn't quite catch it right after it made that move, but notice it just went a quick like 1R. And had I not done that and I just used this candle as my stop, it would have come back and stopped me out. But when it made this move, when it made that move, it should have kept going. It should have went up to the top of this channel at least. And that would have been my target. That's where I would have got out at, because had it not broke that, it's coming back down. That's just price action. And I'm a big proponent of trading price action. That's like one of my strong suits. Let's go ahead. Let's look at the next trade. We got in that one at 1023, and we say that that one was the A trade. That was our A trade for the day. So entered in, check our entry out on NinjaTrader. Nice clean entry. Notice we're holding in this channel. Now these channel lines are, let's see, we can measure it right here. Let's measure it. So 23,460 is the base, 23,475. Just what I thought, about 15 points worth of room in each of these channels. Market, I'd like for it to be about 20 points. 20 points. So I got two things I can do. I can either keep it at 15, which is narrow, or I can spread it out and I can make it 30 and make it a little wider. And 30 would have put it right up about there. So my entry, I'm in, good solid entry. My stop, I'm just giving it this candle. And my target is this fib level in the top of the channel. So I want to see this go and break this fib level and just rip. Because what I don't want to do is sit in it and wait for this pullback to happen and then go. I'm going to take my money, and you notice almost top ticked the exit right there. I had my target set right there. It hit my target, peekabooed over, and then rolled over. And I would have stopped had I used this as a stop. And I would have stopped out if I used the bigger candle as a stop, because you see what it did. It came down and just kind of wicked below that candle. So those were my first two trades of the morning. Solid morning. Next trade, we got in that one at 1035. So let's come on over. I'll blow these candles up just a little bit more so we can kind of see them. 1035. Let's see where that candle is. This is 1034 candle. 1035 candle. Basically a continuation. Basically a continuation for the move, but we're also breaking into this new channel right here. My stop again is going to be the previous candle's low. And notice I get out of this trade in this candle right here because I'm setting up to kind of start bar by barring. So I get out because I'm thinking that this is going to hold this particular candle. You see, I kind of stop out at the low of the candle, basically getting me out break even. This pulls back again. If I was using this candle as my stop, it would have stopped me out. If I gave it a little extra wiggle room, I would not have stopped out. But this thing just goes, y'all. It just goes. I'm like, come on. This is where I say, if it's a good trade, stay in the trade. Stay in the bloody trade. But yeah, so another one of those where I left quite a bit of money on the table. But if I use this as my stop, that would have been tight. A lot of times I don't use a candle. Sometimes I'll give this thing the entire bounce cloud. I'm gonna go in, I'm gonna turn on this study right here, which will put ATR stops on the chart eventually. There we go. Let's bring it back over to that area that we were trading. And so now you see this was my entry here. So now I got an option. I can use either an ATR based stop or I can use a bounce cloud stop. But look at that, the ATR was right at the base of the bounce cloud. So several different types of stops I can use. I could put it just below this fib level if I think this fib level is going to hold. A lot of times I'll do that, because if we get over this fib level, my thought is always that we're going to the next fib level. In this case, that next fib level was a long ways away. This was the 88 level, and then this was the 100 fib level. Something that I couldn't quite grasp was on NinjaTrader, it was showing that the 100 or previous day's high is what that is, was at 510. We noticed that's where it kind of peekabooed over. At 510 on Thinkorswim, that's not where it's at. It's showing it up there. So could be due to how they're calculating the day. But yeah, that was our 1035 trade. So let's go ahead. Let's take a peek at 1050 and let's see what that trade looked like. So 1053 or 1052. Let's put a mark on the chart. That's this candle right here. Come on, y'all. We had this same type trade yesterday. We had this same kind of trade yesterday. And the one thing that I did want to see is how my grading was. I gave this a C. No, I would have called this a D trade. I'm going long. This is basically, I'm trying to play this continuation of this move. And I have a couple of different options to manage it. So I remember this trade and I jumped in it on this pullback, because if you notice on the NinjaTrader chart, the entry is closer down to about right there. So I took this trade as it was bouncing off of this gray cloud. This gray cloud is a 1 minute fast moving average cloud. It's like a 10-20 moving average. So it should be, if this is momentum, it should bounce and it should keep going. So I got a good entry, y'all. This was a very nice entry. But what I wanted to see this do was break the high of this candle. But this was a bad trade for two reasons. I never want to take an entry where the candle I'm trading has broke the low of the previous candle. That's very bullish in my opinion. It's very bullish. I want to take a trade when the candle I'm trading breaks the high of the previous candle. That's bear, or that's bullish. Boom. I should be continuing to see momentum. So when this did not break the high of that candle, I knew I was doomed. I knew I was doomed. So that candle closed. I went ahead. I kind of got my stop a little tight, put it just above break even, and we stopped out. Our trail stopped out about right there. I call it a break even trade. I looked at my results in Tradovate today and it's showing that I traded at 100%. So it's showing I didn't take any red trades, but I don't really consider these green trades either. I consider those just break even trades. So we see what happens. This thing's flush back out, comes back up. Now guess what we have right there? A lower high from this point right here. You don't want that. That's bad if you're trying to go long. You get an even high, comes back up fairly, or I'm sorry, even low, fairly even high. Let's keep on scrolling. That's bad business. This right here is bad business. Old LMD. I'm adding, coming down through here, trying to salvage a trade. I'm going to try to salvage this trade and I'm going to get blazed. Look at this, y'all. I'm going to get blazed. So having Tradovate set to where I can't just be arbitrarily just trying to add into a loser, it's clutch right now, because trust me, looking at this chart, I probably would have added here. I probably would have added here thinking that this is going to bounce. No. That just tanked. And then I kind of went outside, went and cut my grass, tried to get my yard back looking decent. And then I came back in about 11:45 or so, and I took another trade, y'all. And that trade wasn't, let's see, hold on. Again, we're not going to say that. We'll look at it. 11:57. So we're getting in on this candle. I remember this trade. So let's see, how can we do that? So this is chop, y'all. This is chop. I'm going to go ahead. Let's back this out. And I'm going to show you how I normally will set my chart up. If I came and I sat down at this time right here, what I'm going to do, I'm going to bring this down one level. So I'm looking right here. You notice how this line is sitting at that point. I'm going to bring the next line down so that it sits at that point. And I want this chart to be just over this cloud. And then the down channel, same thing. I'm going to find a point. So I'm looking at that point right there. I'm going to bring this line up until it touches that point. And I want this channel to be just below this area. And may bring it up one more time. Let's take a look and see, because the chart is red. So there we go. I'm good with that. So if you look at this, market had kind of flushed down, came back up, met resistance. This area is highly congested. I really should not have been trading this. You got VWAP, you got this pivot cloud, which is what I call this orange and gray cloud. First line of defense, second line of defense. You got a lot of stuff going on right here that can have support or resistance. Different traders use different indicators to trade. So somebody might be using VWAP. Somebody might be using a 10 or 20 1 minute moving average. This, what I call my second line or my first line of defense, is a 15-minute 20 EMA. Somebody might be using that. So this had a lot of congestion. But the reason that I took this trade was we had this nice bearish candle. That's an open face candle. We get a bullish candle that picks back up. Then we get a bearish candle that engulfs this bullish candle. So you got bear candle, bull candle, bear candle. They got this bull sandwiched in between. I want to take, and then we get this little resting candle. So I want to get short when it breaks that level. But look what's right below it, y'all. This darn channel. So when I get in, it makes a nice move. But if we look up at the notes, let's look at my notes real quick. It says I got a bad feel giving up points on entry affecting the trade. You see where I put my arrow? That's where I wanted to get in at. This move literally flushed down and I caught a field right there. So I gave up quite a few points. Let's look at that. Entry should have been 514 or 414. I got in at 407. I gave up 7 points. 7 points. That's $14 a contract. This thing came down. So let's see. Let's go 414. So that was like a 12-point move. It's like 24 bucks in that move on one contract. Comes back up, it pushes back down. Now here again is where I trade price action. This should keep pushing down. This should not start wicking back up. This should keep going. When it doesn't, I'm getting out of that trade. So I got out in this bearish candle, this hollow candle. We see we get a bullish candle, pushes this back up, and off to the races it goes. Another thing, you see this channel? This was a channel that I drew first thing in the morning. You see another channel up there. I'm going to activate this one. I'm going to bring it over. I had drawn that channel right there. I used those points coming through there. And what I like to see is when price gets back in a channel, I want to see that explosive move down. And that's what we got. But watch this when I extend this to the right. I'm going to extend that one to the right. And I'm going to turn off the right extension on that one. Because this was the channel I actually was trading. Look at that move, y'all. Breaking VWAP in the channel. My entry should have been right there, but I caught a horrible feel. And this should have kept pushing down. If you look at my exit on Ninja Trader, I got out at 406 in this candle. Let's see where 406 is at in that candle. 406 is right there. I'm keeping my stop right on the edge of this channel because price should not break back out of that channel. I get out, make a couple of dollars, basically break even, comes down in the channel, wicks back out, and at that point, nah, this is not a good trade. Let's take a look at it. Let's see what the market does. It does finally come down. This was my target. Second line of defense is green line. That was my target. It does eventually hit it, but it would have took me through some heartache. It would have took me through some serious heartache. Entry would have been 409. This thing went about 50 something points. I would have been down like $100 on one contract just trying to see this come down here to this point right here. Again, old LMD. I'm going to try to salvage this trade. And if I had enough wiggle room, I might have made this trade work, but it would not have been a good trade because I would have had a horrible drawdown for a little bit of profit, and guaranteed I would have probably gotten out in this candle right here. I would not have tried to see this come all the way down. But that's what we did today, y'all. That is what we did. Look, market still kind of made a move. I wanted to see that. Let's take this channel that I drew right there and let's see how it lines up over here. I'm gonna just find a point where price is kind of in that channel. And look at that. Using this area right here, we see price kind of respected the channel here. We see price respected the channel here. So once I draw a channel, I usually don't really mess with it. Let's go ahead. Let's look at the spacing on this one. So the top of that one is 312. The base of it is 290. So 300, that's 10 points. Perfect. Those are 20-point channels. That's what I want to see right there. You can see it here. 40 up to 60, maybe about 21, 22 points. But that's how I like my channels. I want them to have about 20 points worth of room in the channel. It's $40 per contract. If you have 5 contracts, that's $200. Pretty doggone good. But on that note, I'm going to go ahead. I'm going to wrap this one up. As always, thanks for checking me out. If you hadn't hit that like button, please do so. If you're not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. Like I said, I'm loving this report card. I'm loving the report card. Easy way for me to track my trades as I'm taking them. And it gives me something to look back at in the end of the afternoon and not have to base it on my memory, which is horrible. My memory is horrible. So gives me a quick, easy way, jot down, put down some thoughts. I can come back end of the day, do my trade recap and compare notes. Was what I was thinking at the time really what the market was doing? Or was it doing something else? And I shouldn't have been doing what I thought I was doing. So that I like. Also, I like not looking at P&L. A lot of times we get caught up in P&L, and for somebody that may be having a small account and they're not really making a lot of money per trade, their P&L might suck, but they might be making 20-30% based on their account size. Whereas someone with a big account, their P&L may be crazy. They may have like out of this world P&L, but they might only be making 2%, 4% on their account size. I don't want to say who's the better trader, but I'll say which one is the better trade. The person that made 10, 15% on their account size, or the one who made 2 or 3% on their account size? Something to think about. Let me know what y'all think about. On that note, I'm up out of here. We'll be back at it again tomorrow. I should be able to sit down at the market when I want to sit down, which is normally about 6:30 in the morning. So we'll be back at it tomorrow. Peace.